Hello and welcome to Dukas Copy TV, where I'm joined by Bart Stemmet from NKC African Economics. So Bart, South Africa's year-on-year inflation ticked up slightly in June. Does this mean a rate rise is definitely on the cards, or will the SARB wait until the US Federal Reserve make their move? What are you expecting from the Monetary Policy Committee today?
Well, inflation picked up by a little less than what was expected. It was expected to rise to 5% and came in at 4.7%. And what was especially encouraging was core inflation slowed to its lowest rate in more than a year, which, along with the fact that the National Energy Regulator decided to deny Eskom's application for further tariff hikes earlier this month. Those factors combined, I think, gives the central bank some space to keep rates unchanged today. Although it is hanging in the balance, really. We are still in a tightening cycle, and the small rate hike cannot be ruled out. But I think the SARB will wait until September to see what the US Fed does before it makes its move.
The central bank expects the economy to grow 2.1% this year and 2.2% next year. With rising inflation, high unemployment and power shortages, how do you see the economy performing heading into next year?
Well, I share the central bank's view on what the growth rates are going to be. But unfortunately, the only reason the South African economy will reach a 2% growth this year is base effects. We suffered very costly strikes last year in the mining and engineering manufacturing sectors, which really inflates the figure for this year. On the whole, the South African economy is lacking momentum, and as you said, there are several headwinds that are really keeping growth contained.
Taking a look at wages in South Africa, are they rising alongside inflation?
Well, it depends on different sectors. Several key sectors have seen wage growth in excess of inflation and productivity growth, and that's specifically the mining sector and a couple others. So that is putting a lot of pressure on companies and on their profitability. And unfortunately, given South Africa's rigid labour legislation, it puts them in a tough spot.
Now, the rand has slipped lower ahead of the interest rate announcement. What is your predictions for the South African rand, US dollar, over the next 6 months?
Well, I think the uncertainty surrounding when the US will hike interest rates, given South Africa's large current account deficit and domestic issues, will put the rand under pressure in the next 6 months, even though it is, based on fundamentals, probably a bit undervalued. But the next 6 months will certainly still be a tough time for the rand, and then we expect from 2016 onward maybe a slight appreciated trend. But until then, the rand will be under pressure.
Bart, thank you very much for sharing your insight with us. Well, that's all right now, but keep clicking back for more fresh news and analysis throughout the day. From me, Louise McCauley, it's goodbye for now.